Hi guys, welcome back to the channel. I hope you're having an awesome trading week. It's a new month, so you know how it goes. We start with the monthly, the multi-time frame analysis. We first move the previous month's high and low. So what you can see is that on the monthly, after rejecting this monthly structure high, it had a very big bullish push up and has come to fill this imbalance here, which is present on the weekly, but it has traded to this $24 level of supply and demand and has formed a doji candlestick. This is where the momentum died out, so that shows there's a lot of selling pressure. But you can also see that this is the previous, this here is the previous bearish candle in all of this bullish candle in all of this down move here. So that's where price was bound to retrace to. But because of the overall bullish structure, because this is a previous high, current high low, and the current high up here on the monthly chart, I'd still expect price to continue with its bullish move. But that's on the monthly. Currently, we're seeing rejection of this $24 level of supply and demand. If you go to the weekly, you can see that there's a lot of wicking, both up and down, but mostly to the downside, which shows there's a lot of buying pressure trying to push the market higher. You can see from this week here, price tried to trade low, it was pushed up. All the weeks following that have tried to trade higher, but have tried to trade lower, but price has been rejecting. Go to the daily, you can see that price is still in this consolidation. So price is not really, the market is not really going anywhere. So it has changed phases from an expansion to a consolidation. So what I can expect is for price now to trade higher. Why higher? Because it has already taken out the sell side liquidity on the lower side. However, this week there are two major news releases. One today of the 1st of February and the next one on Friday, which is the 3rd of February, which is surely cause the market to move in one direction exponentially. Let's go to the 4 hour. In the 4 hour, you can see, yes, even more clearly how the price action was sideways, not really going anywhere. We can't really tell the levels of structure with this kind of movement. So I'm more inclined to just wait for the news release and see where the market will go, and then take my setups from there, or even trade the next week. Because when market is moving sideways, you can trade it, but you trade it within the range. For example, if I was to buy at this low, I'd sell at the high of the range. If I was to sell at the high of the range, I would take my targets at the low of the range, not past there, because price has a higher probability of bouncing up and down and just moving, going nowhere. But if you go to the 4 hour, you can see the structure points, these black lines. The structure is bearish. This is the lower low, previous low high, current lower. This is the previous low. So what I'd expect is for price to continue moving in this sideways move until the news release happens. So if we go to the hourly, we can see that price came down yesterday. It took out this sell side liquidity here and then traded higher. Yesterday I was looking to sell at this point here with yesterday's Asian range, but it didn't give me a setup, and it just went to targets which was this sell side liquidity here, and then it rejected back into the consolidation. But what you can see is the structure on the hourly. On the higher time frames it's consolidating, but on this time frame at least we can determine the structure points. Let's start here. Structure on the hourly is bullish because these are the structure points on the hourly. Previous high, higher low, higher high. So those are the structure points on the hourly, which shows that price is bullish on this time frame. But you have to remember it's a consolidation, so anything can happen. So if I were to buy this market, I'd buy only up to this $24 level of supply and demand. But since news is being released today, we can see the market whipsaw every which way, but at least it will give it volume to move. Let's go to the 15 minutes. We can draw Asian range. So if we look at the levels of structure on this time frame, see, this is the thing with consolidations. Now with this, in this time frame, structure is bearish because you can see these are the structure points. So price would be bullish if it passes, it trades above this high over here, taking out this equal highs here, which act as buy side liquidity. That's where I'd take a long two. That's where I'd take a long position. That's where my targets would be. So yeah, consolidation is a bit tricky, not the best market conditions to trade in. But if I were to trade this market, I'd wait for price to trade lower than the Asian range here, and then I take a long to at least 23.8 or the $24 level of supply and demand, and get out before the news release occurs. So guys, if you want to become a fund manager with FTMO, check out the links in description. Let's go. On gold, we start on the monthly. We can see that gold retraced to this previous bearish candlestick here, which was marked by the 1620 level of supply and demand, and shot up. So the previous 3 months have been very bullish, and this, the $2,000 level price point, is the overall targets for the monthly chart. But here we can see price has been very bullish. Let's move these levels. When we go to the weekly, we can see that price has also been very bullish, but then it has carved trade above this weekly level of supply and demand, this 1915 level, and wicked, but has managed to close above it consistently. So there's a higher probability of it going up than down. Let's say that. Yesterday, on the daily, we're waiting for price to trade lower to take out this sell side liquidity here left by this candlestick. It did, and immediately rejected to the upside. So currently the daily structure is bullish because here, and here the levels of structure shows that price has a high probability of trading higher based on this time frame. And this kangaroo tail, it's a doji candlestick on the daily, and you see it cleared all these previous days lows, but has managed as only since this point price hasn't closed lower than here. So there's this daily consolidation here in this area. It will be more clearer when you go to the 4-hour chart here, whereby we can see price clearer you'll see that, yeah, there's been this consolidation here. Yes, price traded above it, but immediately came back into the consolidation. Traded below it yesterday and immediately came back into the consolidation after taking out this sell side liquidity. Actually, yesterday I was looking for a sell here, but price did give me an entry and I entered one when it was retracing here. Off of say FOMO. But yeah, it was a mistake. But everyone makes mistakes, you just have to learn from it. So what we can see is that price traded lower, came out and took all this liquidity here formed by these wicks, and even this one cleared all of it, and even this one, and then formed a bullish setup, which is this engulfing candlestick. So on gold, my overall targets are here at 1970, or let's say 1960. It was almost reached here when price reached 1950. At 1960, farthest targets 1965 because it's the middle of this imbalance, but there's still a probability you can reach 1970, but it's in this range. That's why I'm looking to target. And since price has formed a bullish setup on the 4-hour after taking out that liquidity, I am more inclined to buy this market. But the thing is, there has been the structure on the 4-hour is bearish, which is very sus, I might say. But overall structure on the daily is bullish, and even though structure is bearish, you can see that here there is buy side liquidity formed by this equal lows, equal highs here, and also there is an imbalance here on the 4-hour which is yet to be filled. So this would be where target before price trades lower, because it has come to this level of major level of supply and demand and rejected with very bullish candlesticks and setups. I am more inclined to buy to at least these levels from, let's say here, this is my closest target, 1935. So I'd buy till there, and then after that we can see what happens. But before, that's the next closest level to target. You can see that I'm saying yesterday's setup, you can see it clearer here. Then it retraced back. There was an entry at the 5-minute, but it didn't play out in my favor, and that's okay. So if we look at the hourly structure, is on the hourly structure is also bearish, because we can see that there is this level, and it was broken here. So if structure is bearish this time frame, yeah, that's what I'd look to target. On Monday, I was waiting for price to trade above this equal highs so that I can take a short, but price didn't trade above there, so I didn't get an entry. But then, since structure is bearish, even though I'd look to sell eventually, first I'd expect price to trade above this buy side liquidity, take out this liquidity. So from here, now it can trade lower or higher depending on the news release. In fact, not depending on even price. The news will determine a lot. But then on the hourly, still expect to target this highs. You can see that these highs also coincide with the previous day's high. just a bit higher. So if you go to the 15, with the 15, let's dot our fib, our Asian range. The midpoint is this one. So on the 15 minutes time frame, structure is a bit different. Let's follow it. Our structure is the same. So on the 15th, structure is still bearish. Here is when structure, if it trades above here, is when structure will be bullish, because the structure points are here, here, and here. Those are our structure points. So what I'm waiting for is price to trade lower than higher, because these are my closest targets. So yeah, we'll see how price plays out. Make sure to watch the markets with me and have an awesome trading day. Peace. Oh, I feel for my brother.